Welcome back to Explain the Charts. Today, February 16th, 2025, we're diving deep into the USDCAD pair, analyzing recent market events and correlating them with candlestick data across various timeframes. Recent news headlines point towards a mixed sentiment surrounding the USDCAD pair. Reports of increased trade tensions between the US and Canada, as seen in headlines from major financial news outlets like FX Street and Bay Street, CA, may contribute to increased volatility. Let's examine the daily chart first. We observe a noticeable downtrend in the price action over the past month, marked by a series of lower lows and lower highs. A closer look reveals periods of consolidation interspersed within this downtrend, suggesting indecision among traders. The recent price action appears to be influenced by a confluence of factors. Now let's analyze the 1-hour chart to pinpoint intraday fluctuations. The hourly candles reveal more short-term patterns that help refine our perspective on support and resistance levels. We can identify key support levels around 1.35 and resistance at 1.375. These levels correspond with previous price action. The 15-minute chart will assist us in recognizing the finest-grained movements. In the current situation, the 15-minute chart will provide us with critical insight into the most recent price changes. While the daily chart suggests a general bearish trend, the 1-hour and 15-minute charts provide nuanced observations on intraday swings. Focusing on the 1-hour timeframe between October 26th and November 2nd, 2023, shows a sharp decline in USDCAD values. This period corresponds with reports of U.S. tariffs on Canadian goods, aligning the chart data with the news. Short-term, the USDCAD pair appears to be highly volatile, making day trading a potentially lucrative but also risky strategy. However, the current price range suggests a potential bounce in the short term, presenting opportunities for both long and short positions depending on risk tolerance. In the long term, the overall trend seems bearish based on the daily chart's patterns. However, economic indicators and upcoming news could alter this outlook. The long-term implications of US-Canada trade relations remain uncertain, which could influence the long-term movement. Key price levels to watch include immediate support around 1.34 and potential resistance at 1.37, 1.38, and 1.40. A decisive break above 1.38 could signal a shift to a bullish short-term sentiment, while a fall below 1.34 would reinforce the bearish outlook. The likelihood of these events depends on market reactions to news and economic data. Important upcoming events and economic indicators that could impact the USDCAD pair include the upcoming Canadian Employment Report, any new trade agreements between the US and Canada, and the overall global market sentiment. These events are important to observe because they can significantly alter the short-term and long-term direction of the price movement. In conclusion, while the current trend appears bearish in the long term, short-term opportunities exist for both long and short positions. Key support and resistance levels provide strategic entry and exit points. Keep a close eye on economic releases and news related to US-Canada relations for a better insight into the market trend.